What's up, everyone? It's Karthik with MoneyVest. A little bit late live stream today, but just wanted to go live for a bit as we discuss the market open here. Markets are already open, so I'm here to answer any questions for all of you. Just make sure to let me know if the audio and the video is good. And yeah, I'm just exhausted from all the moving. It's still ongoing right now. I am not even close to getting done. But yeah, hopefully by the end of it, it will be a nice, cozy home for me to settle into. But anyway, markets right now, QQQs are down about almost 1%, recovering a little bit of the yesterday's overnight selling pressure, but we are still down. S&P 500 is down about 35, 36 basis points. And then we've got Ethereum and Bitcoin once again selling off pretty aggressively. Volatility is up almost 2%, although selling off right after the open, so we're seeing a bit of a pullback. And among Magnificent 7, we are seeing a pretty substantial sell-off in the likes of NVIDIA, Tesla, Google, Meta. All of these are also selling off, with Oracle down over 14%, back inside this green rectangle as well. So thank you so much for joining, everybody. Again, I really appreciate it. We're doing, I think, a public live stream today, so let me just update that a little bit because I didn't realize yesterday's live stream from Jerome Powell picked up on the public live stream as well. But that's okay. So again, any questions, let me know. More than happy to answer for all of you. And pre-market was red, overnight was red, and we are seeing that continuation into today's trading right now, as markets are indeed rolling over. Nasdaq is down almost 1%. So, okay, let's take a look at some stocks. But before we get there, if there's any questions around macros, fundamentals for the overall market, volume's been a lot lower. And of course, we got the third and final rate cut from Jerome Powell yesterday. And we're going to find out what 2026 has in store for us as well. I'm absolutely exhausted from the entire day. It's been a lot. Oracle is just getting crushed. Yes, Oracle is absolutely getting crushed right now. Down 14%. The MoneyVest index has, I think, rolled right back down. It's going to get updated as soon as... It's going to get updated in... Well, it's just updated, 6:40 p.m. So yes, 3.57 is where we are. And NASDAQ 100 is down to 3.47. So we're back in neutral for the NASDAQ 100 here. Where do you go for your macro events? So we have a lot, calendar-wise. We're adding the economic calendar. Right now, I do use Econ Day for most of the macro events. But yes, it's going to eventually make its way over to the website as well. On the MoneyVest platform, it's going to include the economic calendar as well. Yeah, moving is rough. Nice of you to go live during all this. I appreciate that, Mike. And yes, moving is indeed a very, very tiresome job. Man, I did not think that moving apartments is going to be this much of a hassle, but it is, because you got to schedule 100 different things. You got to schedule the movers. You got to schedule all the furniture that's coming in, the Wi-Fi getting transported from this place to the other place. So I've only got until Friday. Like today and tomorrow are my last 2 days in this apartment. I'm going to be recording videos. Starting Saturday, I'm going to be moving over, recording in the other apartment. But I'm not going to be living there. So it's going to be a bit of a hassle. I scheduled my Wi-Fi transfer a little too early before I was fully settled in. But nonetheless, eventually the plan is to start living there next week. So yeah, we'll get the Wi-Fi transferred over, and then everything else is just going to be moving in one at a time. Kitchen appliances, all of that. It's a lot of work. Months later, you'll still be unpacking. Yeah, I know. I feel like it's going to be like a multi-month process, and I'm traveling later this month, so I don't think it's going to be fully done until the end of January or even going into February. I'll still be unpacking stuff. But I really want to use my storage, like my study area, as my own office. So you'll see like a brand new setup. The background's going to be different. We're going to put a lot of things there to make it look nice and MoneyVest style. So we're going to have our very own office there as well. So I think it'll be great for recording videos, for doing research, for a lot of stuff, for trading. It's going to be a full setup now moving forward. So yeah, exciting times. But let's go over some stocks, okay? Let's talk about some companies here. And let's talk about Carvana, so CVNA, and then we'll take a look at Netflix as well. Netflix has also been selling off aggressively, so it is trading down to sub $94. Very, very oversold right now on a daily, weekly time frame. And that is going to be that support right now. And if it continues to sell off, if it breaks down further, I think the next support is going to be all the way down here at $82, $83 for Netflix. So that is going to be that support. Of course, if you break down further, that's going to be that next target resistance all the way up to $99, close to $100 for Netflix moving forward as well. I've been in a CD for the past month. I think I'm doing another 1 month CD to wait this out. I never have FOMO. I'd rather just take the safe route right now. So Gorman, I think the better approach is to figure out what your cash exposure currently is. If you are over 50% or more in cash in CDs, yes, it is safe and sound. It's more stable, but I would argue it is a little bit more of an underinvestment stance because you would be considered underinvested if you are anything over 50% cash. CDs are excellent for liquidity and also having your emergency fund kind of tied into a CD or a high yield savings account, keeping it liquid, keeping it yielding somewhat decent returns. But CDs are never for growth. They're never for investment, right? They're essentially for capital preservation, keeping money aside. So if it's anything closer to 20, 30%, I think that's good. If you want to wait this out, you want to be a little bit more defensive, more prepared in this market environment. But if your cash exposure in CDs is a little bit over 50 or more, then it's worth considering, where to put that money into, because there's plenty of opportunities. There's always going to be opportunities in the market. And that's really what we need to look out for. Nvidia getting absolutely demolished right now, down 3% at the moment as Ethereum and crypto. Bitcoin also continues to sell off here. And this is all happening on the back of course, Oracle's guidance. AMD is down over 3%. So if you come over to the semiconductor watch list, so semis, look at that bloodbath here. SMCI, AMD, NVIDIA, Broadcom's down 3%. Lam Research, Applied Materials, Intel, Micron, TSMC, Qualcomm, everything is down except for Arista Networks and On Semi. They're the only two companies that are indeed pushing higher at the moment. So that's where we are. Let's take a look here. Amazon. So let's look at Amazon as well. It's also been selling off, inside this downtrending channel, lower highs and lower lows. I would argue it is still looking pretty weak. And really just the volume has been very, very low, right? The volumes have been low in this market. As we discussed in our previous updates, 60 to 70% lower than what we're used to seeing on an average 30-day basis. So volume is incredibly low right now for a lot of these individual stocks. SoFi, on the other hand, also inside this downtrending channel, lower highs and lower lows, but it's more or less stabilizing, right? So it's not really, I wouldn't consider this as a downtrend. I'd take it back. It's more of a consolidation sideways with a resistance closer to $30, very strong support at $24, $25. And I think that is going to be an area of demand and also an area where one can consider selling put strikes at around $24, $25. Is silver still a buy for you? Overbought on monthly. So depends on your time horizon. Really, Norcon, that's really what it matters. For me, silver is a buy. As long as, of course, I'm planning to hold for multiple years, like 5-10 years out, even longer term is what my plan is. And incredible performance, right? $62 per ounce, up another 1.2%. It's up 116% year to date. The best performing commodity, best performing asset class year to date in the world has been silver. So if your time horizon is long enough, then I do expect silver to get up to over $100 per ounce over the long term. So for a trade, no. Absolutely not. I think it's incredibly overbought right now. Technically, it is extremely, extremely stretched to the upside. As you pointed out on the monthly time frame, the RSI is over 87. So just be very careful because it is very overbought right now. So Gorman, if Barry's betting against AI, it's probably going to happen. That dude is incredibly smart. Well, that's the thing, right? Just because you are intelligent or smart. Like, so that's the thing, right? Even people with high IQ can sometimes not make the best decisions when it comes to trading. In fact, if you know, I think Newton tried his hand in trading as well. Hold on, let me just look it up, because I remember there was a scientist who traded and was not successful. Yes, the renowned scientist Sir Isaac Newton famously failed at trading during the South Sea Bubble at 1720, losing a fortune despite his extraordinary intellect. He succumbed to the market mania and emotional decision-making, which led to a catastrophic loss of around £20,000, equivalent to several millions of dollars in today's money. So if I remember that correctly, yes, it was Sir Isaac Newton. And so intelligence and IQ cannot always translate to trading discipline and proper risk management, right? And you also have to play the odds, right? You also have to play statistics and probabilities as opposed to anything else. I always look at the markets as walking into a casino. That's really what it is. It is properly structured in a way by design, right? For putting the odds against you in most situations. But what we need to do as traders and investors is to make sure that we are taking asymmetric opportunities and essentially trading the odds, trading the probabilities, and only striking quality trades where it actually makes sense for us to do so. That's why in investing and trading, it is more important to say no than yes. There are going to be more opportunities that I'm going to reject than I'm going to accept, because high quality opportunities are not everywhere, right? They are very far and few between, and we as investors need to develop that eye for it, that we can catch those opportunities when they present themselves. And so, yes, Barry has been right many times in the past, but his track record at the same time is not great, because statistically speaking, if you are a short-only investor or trader, you've got about a 28% win rate. But if you are a long investor and trader, where you are net long on your positions almost all the times, your success rate is going to be closer to 72 to 78%. Backed by historical data, that's exactly why we've talked about, if Tom Lee's telling you the market's going to go higher this year, next year, and the year after that, he's going to be right over 70% of the times, right? So that's why he's going to be praised for his accurate predictions, because markets indeed do go up over 70% of the times. Back in 2022, go back, watch CNBC videos of Tom Lee, look at the comments, everybody hating on him, everybody talking about Tom Lee doesn't know anything, he's not, he's always bullish, blah, blah, blah. And then a couple years later, 2 to 3 years of strong recovery and everything, the sentiment kind of swings to the other side. So if you're always bullish, you're going to be right more often than wrong. If you're always bearish, you're going to be right a few times, you're going to be wrong mostly. But our focus has been to be a lot more objective on the markets, right? Looking at fundamentals, technicals, and having a better idea, better understanding of where the risk reward for this market really is. That's why we kind of developed the Money Invest Index, because it gives us a very clear indication on whether it is time to buy, whether it's time to hold. It's never been a sell indicator for me, so it's not like Money Invest Index trading up to over 4.5. I need to sell everything and go into cash. But it's more of an indicator that, okay, things have really heated up. We are in a state of greed and euphoria, and I need to pull back a little bit on my cash deployment. I need to be prepared in case the volatility spike, in case the market comes down. Which, speaking of, we are seeing a bit of a sell-off. NASDAQ is down over 1.2% now. We got the S&P 500 also dropping over 60 basis points at the moment. And the selling pressure continues. And a lot of individual stocks are really struggling, with Nvidia down over 3.4% and Tesla's down over 2% now. So deals are indeed coming in once again. Looks like we are going to get some good deals in this market once again. 3.46 on the NASDAQ 100. S&P 500 is at 3.58 on the Money Invest Index. So that's where we are. QQQ just keeps on dumping. Yes, that's what we're seeing. My covered calls are turning green. That's incredible, Kemp. That's really what we like to see. Adobe's ripping. Adobe also did report their earnings, right? So Adobe pre-market was pushing higher, and right now, well, I wouldn't necessarily call this ripping. It's up 2%. Still within the context of this downtrend of lower highs and lower lows. So that resistance is going to stay put right about there for Adobe. Tony, so glad I held my covered calls on my positions. And yes, that's one of the best things, about trading and investing options is when you sell, you've got a net neutral position where it doesn't really matter where the prices go, you are making money. And that's why I encourage everyone to, look into trading options. It doesn't have to be your core strategy. If you are a buy and hold investor, great. You can do that. And you can continue to invest long-term in high-quality companies. In fact, that's very much recommended. But if you have a couple hours during the days to spare to look at the markets and start trading a little bit more actively, options trading them the right way can be very lucrative because it's a strategy that you're learning and it's going to allow you to generate income. Doesn't matter where you are. Doesn't matter, what cycle of your investing journey you're in. It's a huge skill to acquire because there is, in your portfolio, there's a lot of money that's just sitting there waiting to be earned, right? Shares can be collateral, cash can be collateral. Both of them are just sitting in most people's portfolio, but we like to use it to our advantage. We like to use the shares that we have as collateral. We like to use the cash that's sitting there as collateral to generate some additional income. And what do? We reinvest that back into the market to essentially acquire more shares and accumulate more. So Bitcoin straight line down. Yeah, crypto's been selling off. Ethereum, Bitcoin also getting a little bit of a breakdown there, getting rejected at that resistance of $93,000 once again. On Discord, I'm trying to drive the point that if you sold a covered call yesterday or 2 days ago and you're up 50% already with weeks left until expiry, they should consider buying their contracts back now. 100%. You always want to rinse and repeat the process because if you're already up over 50% in 10% of the time until expiration, it's a great trade. It's a fantastic trade, right? If you're up 50% with 50% left in the time to expiry, okay, sure, you can wait a little bit longer because, the time and the premium is equivalent. But if you're up 50% with 90% of the days left or the time left in expiration, that's a huge win, right? You're releasing that collateral and then you can rinse and repeat and sell a new option and earn more from the new option there. So, yeah, sold an iron call, Dave, 116. They're up over 50% since December 9th. I'd rather take my 50% now and have another opportunity to sell again. 100%. 100%. It's all about releasing collateral and using that once again to repeat the process. So, quick bucks. BITX, BMNR all selling off as well, down over 6%. We got BITO, IBIT, Ethereum, CleanSpark, all of them selling off here on the back of, look at that dump. Look at that dump. What is our heat map looking like? Let's go over to the market dashboard here. Beautiful. It is really financials that are doing a little bit better. A lot of this sell-off is concentrated in technology. So you can see Google, Meta, Tesla, Amazon, Apple, and then look at those semiconductors here. Oh, what a day. NVIDIA, Broadcom, AMD, Micron, AMAT, Lam Research, everything. A lot of liquidity flooding over to financials, healthcare, industrials, and a little bit of real estate, basic materials, all those sectors. And we are in a bear market for the real estate sector, down over 21% from all-time highs. S&P 500 is down over 1.2%, so nothing crazy. NASDAQ 100 is down over 3% from all-time highs right now. So here we go. Incredible deals coming in. December discounts, Christmas sale is getting started for us. All right, everyone. Thank you so much for joining. Just wanted to do a quick live stream before I head back out to do some moving in stuff. But thank you so much for joining. I really appreciate you all. We'll send out all the alerts if there is anything to buy and to consider, given the selling pressure here. We'll send out all the alerts in the Discord. So thank you so much for joining. And yes, we are seeing some selling pressure here. Meta's also down 648, 650. I'm looking at potentially 660 covered calls for tomorrow, or maybe 655 even. Might take my chances with those. So thank you so much for joining. Happy investing. I'll see you all in the next live stream.